Hello and welcome. You're watching FYI. I'm Sonal Mehrotra Kapoor. Now, India is one of the youngest countries in the world, with millennials and post-millennials comprising a significant percentage of our workforce. Now, how these millennials behave, their buying patterns, selling pattern, traveling patterns, this all becomes very important. Now, in an earlier episode of FYI, we did 10 ways in which millennials are making money. Investing, and some fascinating trends actually came out of that. One being investment in real estate, how that is evolving now, which will be the focus of today's episode. How millennials are defining real estate trends now in the country. We'll talk about that. Now, a recent report by nobroker.com highlighted that the number of millennial home buyers has significantly increased. Look at this percentage. It has gone from 49% to 63% since the COVID outbreak. So there's a huge, this COVID sort of angle to how the story is evolving. Key metropolitan areas such as Bengaluru, Mumbai in particular have seen a drastic increase in concentration of millennial home buyers. And year-on-year sales of 3 BHK housing units, that also grew by 19%. Now, the India fintech sector is currently estimated to be worth around 50 to 60 billion. And guess what? By 2025, that 50 to 60 billion is likely to go up to 150 to 160 billion by all possible estimates there. And of course, the heart of it all is that millennials are defining these trends and they will be pulling this real estate story forward. So without any further ado, let's take you through the top 5 trends that are going to dominate the minds of these millennials, and how they are thinking is going to define the real estate sector. Let's bring on the trend number 1. Now, entry of first-time home buyers. This is the all crucial bit here. India's real estate sector is growing in a strong post-pandemic recovery thanks to favourable government schemes as well, and the entry of new class of these first-time buyers in the market. These are people encouraged by the growing demand. They want spacious homes, big homes, and with homes now becoming not just a place where you live, but a place where you work as well, the place where you party as well. This sector is projected to reach a valuation of 1 trillion by 2030. And this, by the way, is a trend across the board, not just with millennials. Gen Y, however, is estimated to be the largest consumer demographic, and at the moment, with high levels of disposable incomes with them, this is a generation that is going to be playing a very huge role in the real estate story. Let's take you through trend number 2 in our list. Well, tech enhancement in the real estate sector. The real estate space is fast changing. Tenants are now automating their rent payment cycles through online platforms. Home buyers are now availing home loans with relative ease from the comfort of their homes. Lenders are using advanced algorithms to accurately evaluate creditworthiness, conduct identity verifications as well, even eKYC now becoming a trend. Another thing that is emerging in this tech real estate space, is the loan dispersals, which are now much swifter. Earlier, it used to take days and months and heavy paperwork. Well, now, in a matter of minutes, the process of loans also is taking place. And if that's not it, well, blockchain technology, AR, VR, that has made it possible to verify purchases and legally transfer property without making any physical visits. This, of course, is a favorite amongst the millennials as well. And this is a generation which has grown up, remember, with so much of digital technology, learning through it as well, that they love every time there is an overlap with tech. Trend number 3. Green cover and seamless access to hospitals. This, of course, more spacious, well-appointed homes with ample green cover of this very environmentally conscious generation as well. That seems to be dominating. Along with that, they just don't want green cover. They want schools, hospitals, even young bachelors and bachelorettes now don't want to settle in for a small house to start with and gradually, progress to bigger spaces. They want it big and they want it now. And they want it surrounded by facilities like sporting complexes, spas, activity centers, groceries and hospitalities, all in the vicinity. In all, millennials are now demanding a better living experience at a much earlier age. Trend number 4, and this is an important one, the trend that has been seen is of how people are willing to move to a suburban life. Now, potential home owners in India, particularly the millennials, are now more willing to relocate to suburbs to live in larger, relatively inexpensive houses as well. Now, in a survey that was conducted amongst about 100 builders, 59% of respondents observed a higher demand for properties located in suburbs. And builder discounts also very well received by this new age of Indian consumers. Take this, for example, 87% of the surveyed builders mentioned how offering discounts led to increase in sales as well. And trend number 5, and my favorite really over all these trends that we have seen, which is part ownership of properties. A growing number of Indians are now acquiring sliced of rent-yielding residential commercial properties, owning a tiny portion of an expensive property, but something that gives them regular returns. In a way that is similar to somewhat like investing in a stock market or a company, for example. Fractional real estate as a concept is well known abroad and now gradually catching up in India as well. And what it allows you to do is investors can buy, say, as small as 2% of, for example, a vacation home for a minimum of 2 lakh and use it for their weekend getaways in addition to earning rental incomes there as well. For instance, if an investor wishes to own a portion of a 1-bedroom hall kitchen property in Lonavala, the minimum investment can start with as little as 2 lakh rupees or 5 lakh rupees in that case. NRI is also picking up huge stakes in this area. So, well, that are top 5 trends for us dominating millennials and the real estate segment. Let's go to our panel now, which, and we've got a good one for you today. We've got Sanjay Dutt joining us from MTC of Tata Realty Infrastructure Limited. We've got Ashok Kumar Tyagi joining us, CEO and whole-time director at DLF. Thanks so much for your time. And we've got Mani Rangarajan with us, Group Chief Operating Officer, Housing.com, PropTiger.com and Makan.com as well. All right, let's start with Mr. Tyagi then. Mr. Tyagi, your thoughts firstly on what we've discovered as trends which are supposed to dominate the millennial world now.
Okay. So, I mean, frankly, not being a millennial myself, some of these trends are very exciting. One thing's clear, Sonal, that and it's not just, I think it's got more accentuated post-COVID, but clearly the average age of the home buyer in India is dropping, at least in the urban areas, is dropping for sure. And a lot of these things, including, I think, the fact that post-COVID people wanted bigger spaces to work, bigger spaces to stay, a lot of those trends have sort of tended to, I'd say, strengthen this entire thing. And I think the one piece that you did not articulate clearly is that the access to extremely cost-effective home loans, that has also fueled this entire younger real estate buyers in the last, I'd say in the last 5 years maybe, and clearly in the last 12 to 18 months this has been there. I mean, we have seen in Gurgaon and NCR, I mean, move towards younger buyers at almost every conceivable sort of segment of the market, from the so-called affordable or mid-income housing to frankly some of these young tech millennials, even buying the camellias and the super luxury pieces, frankly. So you're right, and again, all the things, moving to suburbs, access to technology, access to hospitals, all of these are playing a big role. But clearly the younger people are beginning to dominate this entire segment from a customer standpoint. I think that's a given now.
That's a given now. And perhaps this shift also has happened very suddenly because of COVID, I feel. These are all trends we were all keeping an eye out for, that this is how, the future home buyers are going to behave. But because of COVID, so many changes now and sort of has catapulted the entire sector there. Let me bring in Sanjay Dutt on this now. Please go ahead, sir.
I believe the real estate sector has moved from being not so transparent, regulated, to transparent, regulated, and attractive for the reasons that we just discussed. But more importantly, most of the people thought during pandemic that these sectors such as IT, financial services, healthcare, many other sectors would suffer. They've actually grown because the comparative edge of India as an economy has led to growth in these sectors, in which stock markets can tell the story. So the confidence that has come back from insecure about jobs to being secure about jobs and now being bullish about jobs, and during pandemic, they've realized the importance of having a good quality infrastructure. Now, you mentioned about, they're willing to go to suburbs. The reason they're willing to go to suburb is because at the end of the day, they want really aspirational lifestyle. They want a gym, they want open spaces and amenities. They are willing to take the heat of commuting for a couple of hours. But they know when they actually go back home, they're at peace and they're able to afford the EMIs, which is now the lowest and the most attractive at this point of time. So I think this has really helped, the sector in a very large scale.
Right. And you're important about becoming more transparent. I think with RERA coming in, with all these new policies also coming in, which sort of brings in a lot of consumer confidence as well. And all of that, even rental agreements, for example, a new policy coming out there has also been a confidence booster. But talking about rentals, I want to bring in Mr. Dangarajan there. Do you think one of the biggest blows that has been taken in the real estate segment has been of rentals? We earlier, spoke about how they had dipped and then they had picked up again. But do you see now people wanting to own properties rather than going into rental accommodations?
Yeah, I'll answer this question through making a couple of points. So I totally agree with whatever you and what my fellow eminent panelists have said. So one of the things I think which is very, very clear during both the first and the second phase of the pandemic was people feel secure within the confines of their own home, right? So that to some extent has really accelerated home buying, together with other factors such as lower interest rates and all of that. On housing.com, one of the trends that we have seen both in the first and also the second wave of the pandemic is that while the demand for rentals has grown in some of the cities, we can say with certain amount of confidence that the demand to purchase a home, whether it's a new project or whether it's an existing resale home, has been stronger than the rent side of things, right? And this is also, being accelerated through developers offering flexible payment plans and discounts. As Mr. Dutt said, the transparency in the sector, the fact that branded developers are now coming into the market and the share of branded developers is going to increase. So all of this has given a certain impetus to home buying. And in fact, one of the recent trends that we have seen on housing.com as a platform, which is actually an inflection point starting November, was the demand for under construction homes was stronger than the ready to move inventory, because in some cities, in some of, in some cities especially in some of the micro markets, you don't have enough ready to move inventory. So then people are looking for under construction inventory. And certainly when a DLF or a Tata or a reputed builder, they launch a new project, there are people who are willing to invest in them right away.
Right. So we're perhaps looking at an expansion in this sector beyond the metros and beyond the areas around the metros. We're talking about smaller towns and smaller cities also sort of coming into that. Mr. Tyagi, do you want to weigh in on that?
So that is clear. In fact, I'll give you an example. We had at one time, I don't know, about 10 years back, launched some holiday homes in Kasauli. And for the last 9 years, they were sort of lying unsold. 90% of the inventory was lying unsold.
That's spiked.
In November, we relaunched it and it all got sold out in like a week, frankly.
Yeah.
Well, no salts and nobody had looked at that inventory and even we had forgotten about it. And it all got sold out in a week. Similarly, inventories in relatively smaller locations like Indore and Lucknow, all of those have moved faster. So it's no longer just about the 6 cities. It's actually about the next rung for sure. I mean, obviously, I think the one challenge at times would be that once you go to the cities, still small, the C-class cities, most of the developers, they would still be in the unorganized sector. So I think you could still have some of the older challenges which Sanjay mentioned that, which hopefully are disappearing from the bigger towns. In the smaller towns, you could still have some of those challenges. But I think over time, even those would sort of clean up for sure. But in grade A and grade B cities, Clearly, I think this is expanding for sure.
Right. And holiday homes picking up, really no surprises why that is happening.
Absolutely.
Because with work from home becoming a reality now, a lot of millennials now choosing to stay in places where they wanted to and just working from there. We have Mr. Raheja also joining us now, CMD at Raheja Developers. Thank you so much for your time. Naveen, I just wanted to start by asking you that in this millennial real estate mindset, how does Raheja really fit in? What are your plans for these buyers of the future?
Let me tell you, we are really surprised the way the market is responding to new farmhouses, because the new scheme is on the anvil and people are looking at 1 acre houses. And if I even cannot believe the way the people are coming to us to buy these kind of luxury homes around Gurgaon. Raheja has got a great inventory already with them, because we had a special economic zone which we got denotified. It was there's another property of 160 acres just within almost the Gurgaon master plan itself. So here we are getting such a good demand and response that I think in coming 1 month or so, the project is likely to get launched also. And we are very, very bullish on this. Secondly, let me plotted development which we have been launching and which we have been doing all around. There has been a tremendous demand on that. We have observed more than 20% price increase in just a short span of time. And this is just post the second wave of pandemic. You know, we were finding our prices.
That's fascinating. All right, I think Mr. Raheja is on the road and we seem to be losing his network over there. Let's quickly slip into a break. When we come back on the other side, we'll discuss prices as well, because that's another fascinating trend to watch out for, from prices dipping post the first wave and the second wave to now gradually picking up. Are they at par, or what are we likely to see in the future? That's coming up on the other side. Stay tuned, you're watching FYI. Welcome back on FYI. Today we are talking about millennials dominating real estate trends in the coming season. Let's go back to our panel. I'll begin with Sanjay Dutt. Now just talk to us a little bit about how rates have changed through the course of the pandemic.
So last year in 2020, most of us were kind of worried. So we stayed more or less at stable rates. We did not increase. But when we saw the bounce in the H2, we were confident that we will be able to recover some of the sheen that we lost in the previous years. As you know, Willis was under a bit of weather. However, all the cost increases that took place, whether it was steel, cement, labor charges, developers were continuously absorbing those costs. It was only after the interest rates came down, Maharashtra government made the stamp duty waiver.
Yes,
some initiatives
huge impact there,
Yeah, so we felt that there was a confidence back in the market, and therefore we started to symbolically increase the rate. And we saw the response was still good. We were still achieving our volumes. And very steadily, I would say, not price increase, but we are recovering what we should have increased 2-3 years ago. So we are coming to a par with where the market should have been. And still, the customer is getting all the benefits of financing at lower EMIs, all the goodies. And I would like to give credit to all the developers who have very quickly, in a very agile way, adapted to the changing environment and have offered a lifestyle to the people which they earlier were not able to benchmark against.
Right.
So now they get a superior product, better communities, not just real estate, but communities, I would say, at a lower cost, and sense of security which real estate always gave to their customers.
Right. Mr. Tyagi, how much of a percentage increase have you seen in your properties?
So, the first thing is that I think by middle of last year, the downward plateau had stopped for sure, not only in the primary market, but also in the secondary market, which definitely is a more secular metric. And I think, frankly, from about October onwards, we are seeing prices move up. I mean, it's obviously, Sonal, depends from product to product, but I'll give you an example. We launched independent floors in some of our plotted inventory in Gurgaon. And we launched in October last year at about 11,000 rupees a square foot. When we launched the last edition of that in June of this year, the pricing was 15,000 rupees. And the pace of absorption was almost as high as it was in November. Yes. So I mean, clearly, once the product starts moving and it creates a niche, the market today is absorbing the price increases. The second thing, as Sanjay mentioned, was clearly that the runaway inflation on steel and cement and some of those things, which earlier everybody was sort of, digesting themselves, we are being able to pass on to our customers in a more transparent manner now, for sure. But clearly, it's still the time for sensible pricing. I don't think it's a time for, egoistic pricing that because I am a developer A, I need to price myself 30% more than the market. But clearly, you don't need to price under the market for sure. And maybe you can take a small premium for brand name, but still stay sensible on pricing.
Mr. Tyagi, coming from you, kudos for saying that. Let me move to Mani as well. Mani, just weigh in on how the rates have changed in the rental space as well.
See, on the rental space, last year was a major hit for a lot of the landlords, for the simple reason that a lot of people went back to the hometowns. Vacancy rates were increasing, and rental yields dropped by about 10 to 15% last year. And rental yields anyway in India are one of the lowest in the world, and they dropped even further. But this year, in the month of July, we have seen a reasonably strong increase in the rental space, and also a lot of people are back in tier 1 cities because I think companies will start opening offices in the next few months once vaccination gains pace. So we probably likely to see rental yields more or less stabilize this year. Right.
All right, gentlemen, we'll have to leave it there. That's all the time we have. It's been a fascinating discussion. Thank you so much for your time. That's all we have on the program today. We'll see you again tomorrow. Bye-bye.